Not only has inflation hit a milestone, but so has the economic expansion. And that could be good news for the stock market. Steve Liesman explains.
The current economic expansion turns 106 months old, and tying it for the second longest in U.S. history. When this expansion began in 2009, following the deep downturn from the financial crisis, the iPad was still a year away from being released. At 8 years and 10 months old, the current upturn ties with the expansion that ran from 1961 to 1969. It's almost twice as long as the average expansion, but it has another 14 months to go to break the record held by the economic boom that ran from 91 to 2001, but of course, that didn't end well. Stocks began rallying a few months before the expansion started and have continued rising. They accelerated to the upside with the election of President Trump, but have hit a spot of volatility of late. In the 61 to 69 upturn, stocks gained only about 18%. They surged 244% in the 91 to 01 expansion, but they're up more than 180% so far this run. This has been a growth run like no other. Inflation has averaged about half the rate of the typical expansion. Unemployment has run higher because it surged in the recession. It's now come down to the lowest level since 2001. And growth has averaged only half the level of the average expansion. Amid it all, the Federal Reserve has kept rates well below the level that prevailed in other upturns. So will it last? Rates remain low, but now they're rising. Tax cuts could extend the economic expansion, but deficits are rising as well. Banks are well capitalized, but asset values are high. Most economists think the expansion will continue and even take a run at being the longest on record. But it's shortly after that, later in 2019 or 2020, when many worry that bad luck or the excesses born of good times or even just time itself will catch up with this 106-month-old upturn that has not yet shown its age. For Nightly Business Report, I'm Steve Liesman.